Welcome to the deep dive. Today we're cutting straight to the chase. We're diving into the accumulation distribution indicator.
hmm
Think of this as your focused look at how this tool works and, well, why it keeps coming up in market analysis talks.
Exactly. We've tried to boil down the key stuff, drawing from, different sources that explain its mechanics and how people actually use it across markets.
Okay, great. So let's unpack this a bit. For someone new to it, what is the accumulation distribution indicator fundamentally trying to tell us?
Right. Well, at its heart, the AD indicator is really all about volume. Its job is to measure the cumulative flow of money, thinking buying and selling pressure into and out of a security.
How does it do that?
It looks at both price changes and the volume behind those moves. So, it's gauging the strength, the conviction behind the price action.
Right. So it's not just if the price moved, but was there real buying power pushing it up or a selling pressure driving it down?
Precisely.
And this isn't exactly brand new tech, is it? It's been around?
Oh, definitely not. It was developed by Marc Chaikin, a pretty well-known name in technical analysis. He originally called it the cumulative money flow line.
Ah, okay.
And his first goal really was to use it for picking stocks, to find stocks where buying volume was consistently building up.
Suggesting a potential rise in price was coming.
That was the idea, yeah, spotting that underlying accumulation.
Interesting. So it started out focused on stocks, but you see it elsewhere now.
Oh, absolutely. While it came from the stock world, the AD line is pretty widely used now. You see it in Forex, futures.
Really?
Yeah, the core idea of tracking money flow, it applies across different asset types.
Okay. So our mission today then is to really get a handle on how this indicator works, why traders find it useful, and maybe how it can give us clues about market trends and potential reversals.
That's the plan. We'll break down the mechanics, how to actually read the signals, and importantly, some things to keep in mind when you're looking at it.
All right, let's get into the nuts and bolts. When we talk about accumulation and distribution with this indicator, what do those terms actually mean?
Okay, so think of accumulation as basically buying activity. It's when buyers are showing more interest, getting active at certain price levels. So if a price is trending up and you see rising volume along with it, that suggests accumulation is happening.
Buyers are stepping in.
Right. And distribution is the opposite. That's when sellers have the upper hand, price goes down, volume picks up on the sell side. That signals distribution, money flowing out.
Okay, so the AD line itself is kind of like a running score in this tug of war between buyers and sellers.
That's a good way to put it, yeah. The AD line is a cumulative total. It adds up something called the money flow volume for each period.
Money flow volume. How's that calculated? It sounds like a bit of math.
There is a little calculation, yeah. It uses what's called a money flow multiplier. This multiplier basically looks at where the closing price finished within the high to low range for that period. If it closed near the high, the multiplier is positive. Near the low, it's negative. Then you just multiply that by the period's volume.
Ah, I see. So it weights the volume based on whether the closing price showed strength or weakness for that day or bar or whatever the period is.
Exactly.
And when you see this on a chart, where does it usually sit?
Typically, you'll see the AD line in its own little panel, usually right below the main price chart. It just looks like a line moving up and down. The actual numbers aren't always the main focus. It's more about the direction, the slope of the line.
Right. Now, you often hear traders say volume leads price. How does the AD line fit with that idea?
That's really central to why people use it. The theory is that significant changes in volume often happen before big price moves. So the AD indicator tries to tap into that by showing the direction of that volume flow. If the AD line is trending up, it suggests buying volume is winning out, which could then push the price higher.
So a rising AD line could be an early hint that buyers are gaining control, maybe even before the price really takes off.
That's the hope, yeah. A rising line generally points to an accumulation phase, buying pressure building. And conversely, a falling AD line suggests distribution selling pressure is dominant.
That sounds pretty useful. Are there times, though, when it might be, I don't know, less clear or maybe even point the wrong way?
Oh, absolutely. And that's critical. No single indicator is perfect, right?
Right.
Experienced traders always stress you need to confirm signals. Don't just rely on the AD alone. Look for confirmation from other tools, like maybe trend lines, support resistance, or just the price action itself. It's about building a case.
Makes sense. Convergent of evidence kind of thing.
Exactly.
So how do we actually read the AD line's movements in relation to the price? What are the key scenarios we should be watching for?
Okay, the big thing is the relationship between the price and the AD line. Are they agreeing or disagreeing?
Okay, let's start with agreement. What does it tell us if they're both moving in the same direction?
Well, if the price is making, say, higher highs and the AD line is also making higher highs, that generally strengthens your confidence in that uptrend. It suggests the price rise has real buying interest behind it.
Right.
Same logic for a downtrend. Price making lower lows, AD line also making lower lows, that reinforces the idea of strong selling pressure.
Got it. So agreement equals confirmation. What about when they disagree? When they move in opposite directions? That sounds like where the interesting signals might be.
That's often where traders really pay attention. These are called divergences, and they can be powerful signals for potential trend reversals.
Okay, give us an example.
Sure, let's say the price is hitting new highs, pushing upwards,
Oh.
but you look down at the AD line and it's not making new highs. Maybe it's flat or even starting to slope downwards.
Uh-huh.
That could mean the buying pressure, the conviction, is actually weakening, even though the price is still going up. And that might signal a price drop is coming.
Okay. So the price is still climbing, but the underlying oomph from buyers isn't there anymore. That seems like valuable intel. What about the other way around?
Right. So conversely, imagine the price is falling, making new lows, but the AD line starts to tick upwards, or at least stops falling and flattens out.
Okay.
That divergence could suggest that even though the price is weak, the selling pressure might be drying up. Maybe buyers are starting to nibble, accumulating shares quietly. That could foreshadow a potential price recovery.
So falling price, but rising AD could be an early sign the downtrend is running out of steam.
That's the interpretation, yeah. It implies some accumulation is happening despite the lower prices.
You also mentioned times when the AD line might move even if the price itself isn't really trending strongly up or down.
Yeah, sometimes price might just be chopping sideways, consolidating in a range. But if during that time the AD line starts showing a clear upward trend,
Uh-huh.
it might suggest that accumulation is quietly happening under the surface. This could sometimes foreshadow an eventual upward breakout from that range.
And the reverse for a downward trend in AD while price is flat.
Exactly. A falling AD during consolidation could hint that distribution is occurring, potentially setting up a downward breakdown.
Okay, so the indicator might be giving us a sort of sneak peek at the underlying pressure building up.
That's one way to think about it, yes. Spotting those subtle shifts in buying or selling pressure that aren't obvious just from the price chart alone.
Okay, let's try and summarize some key patterns then. How can we use AD to spot or confirm trends?
Sure. So first, if you see both price and the AD line making higher peaks and higher trough, that's generally a sign the uptrend is likely to continue.
Okay, confirmation.
And the opposite. Lower peaks and lower troughs in both price and AD suggest the downtrend is still in force.
Got it. What about those potential breakouts or breakdowns we just talked about?
Right. If price is stuck in a range, but you see the AD line steadily climbing over that period, that rising AD suggests building buying pressure, which increases the odds of an eventual upward breakout.
And falling AD during consolidation.
Suggests growing selling pressure, increasing the chances of a downward breakdown.
Those are really practical ways to look at it. Okay, let's shift to some key takeaways. Any important limitations we need to know about?
Definitely. So the big plus for the 80 is helping confirm trends using volume, right? And those divergences are key for spotting potential reversals.
You covered those.
But yeah, it's not foolproof. There are limitations.
Like what? What's a major one?
Well, one significant limitation is that the standard AD calculation doesn't factor in price gaps.
Gaps, like between yesterday's close and today's open.
Exactly. If there's a big jump up or down at the open, the way the indicator calculates the money flow for that first period might not fully capture the significance of that gap.
Mm.
This can sometimes lead to, well, discrepancies or a slightly different look to the indicator than you might expect.
Ah, that's a really crucial point.
Yeah.
So overnight news or big opening moves might distort it a little.
Potentially, yeah. It's something to be aware of. No indicator works perfectly in every single market situation. And that's why practice is so important. Look at it on historical charts, maybe paper trade with it first, see how it behaves in different conditions, and like we said, use it with other tools. Don't just trade off the AD line in isolation. Maybe combine it with, say, a moving average to get the bigger trend picture.
Good advice. But overall, for someone just starting out with technical analysis, is AD relatively easy to get started with?
I'd say so. Generally, yes. The basic concept, tracking buying and selling pressure using price and volume, it's fairly intuitive. So it can be a good first step into volume-based indicators. But like anything, mastering its subtleties and knowing its weaknesses takes time and practice. Beginners definitely shouldn't rely on it alone.
Okay, so if we had to boil it down, what's the core job of the accumulation distribution indicator?
In simple terms, it tries to measure the buying and selling pressure behind price moves by looking at where price closes within its range relative to volume.
And the main takeaway for listeners thinking about using it.
I'd say it's understanding how price, volume, and the AD line interact. That relationship can give you valuable insights into market strength, potential trend continuation, and importantly, possible turning points.
Really interesting stuff. Okay, here's a final thought for you, the listener. How might adding volume-based indicators like the AD into your analysis change how you see the market? Think about how it might deepen your understanding of, say, market psychology or potential turning points beyond just looking at price charts alone. How could seeing the conviction behind the moves add a new layer to your analysis? Something to consider. Thanks for joining us on this deep dive.